Hello, everyone. Welcome to the webinar today, where we're going to look at grants and how they can assist companies to fund research activities. This is very important in the Australian business scene. So the Research and Development Incentive Tax Rebate, how's it work? It's available to companies, all types of companies, small and large, but there's two systems. Companies with turnovers under $20 million, small companies, but there are some SMEs, of course, that have higher turnovers, and then companies with turnovers over $20 million. So I think directors and leadership team members should have a great awareness of how the research and development rules work, so that you can make sure you get your benefits out of the R&D system for your company. It all starts with an idea. It might be management inspired, but it might be someone on the factory floor or a retail shop or somewhere in a farm comes up with an idea. Then what would normally follow is that management would say, let's do some preliminary investigations and see where this leads. Is this a possibility that we could be developing a new product? And what you then need to do is to start assembling a file, and the file should have within it some prior art or literature searches. Now that's worldwide. This is not just in Australia. If you are going to claim a taxation benefit, you need to go through this process. If you don't intend to claim the taxation benefit, well, you probably don't have to do much of this at all, other than conduct your experiments. But you might run into some problems because someone else has already got a patent on what you're trying to develop. And you need to keep a file copy of the searches that have been made. Now, this is not just on the internet. It could be in libraries. It could be by contacting people. It might be correspondence to experts all around the world, asking questions about a particular concept that you've got in mind. And again, those records need to be kept, because if you're going to claim the research and development rebates, you need to be able to prove that you did it. And one of the key items is to understand, so that you can state what was the core activity that you had in mind. What are you trying to prove is the core activity that the leadership team or the small team that's planning to undertake this project, and we're just going through the planning stages at this stage, they must identify one core item. And the legislation also requires the company to be able to identify the new knowledge intended to be produced, the new knowledge. And you need to be able to state that you couldn't determine that new knowledge unless you undertook some research and development. And it's then necessary to identify a hypothesis or a hypotheses, a number of hypotheses, so that you can understand what you're trying to prove. So that's a statement, you know, we are going to do the following and hope to achieve such and such. That's the hypothesis. You can have more than one hypothesis for a core activity. You may have approached some experts to assist you in this process. That's normal. They might be university departments, or they could be contractors and various types of consultants. And our recommendation is that you then prepare a research and development plan. Legally, it's not required unless your turnover is over $20 million, but I think it's a great idea to prepare a research and development plan, which is going to be submitted to your board of directors, because one of the key aspects of the claiming of the research and development expenditure in Australia is to prove that you went about this in an orderly, methodical fashion. that you undertook it similar to what we all understand that a university would have done, how it would have gone about this process. Because that's what the Oz Industry and the tax office have an expectation. So the report going to the board of directors for approval for a research and development activity should include a budget. It's just common courtesy, isn't it, to tell your directors how much you think this is going to cost. And that, together with the plan, is an important document to go to the board. Now, the company could elect to apply for an advanced finding. And what an advanced finding means is you submit a very detailed evaluation of what you think your research and development project's going to be to the Australian Taxation Office, and they send it on to Oz Industry. And normally within about 6 weeks, they will give you an indication whether they approve that or they don't approve it. So that's an advanced finding. What it does is give some certainty as to whether the ATO and Oz Industry, the two government departments that administer the research and development incentive rebate, are going to accept your claim for a rebate when you get round to lodging the company's tax return. And if you've got any necessity to undertake overseas expenditure, you have to complete an overseas finding. Now, let me warn you right from the outset, it is fairly difficult to get approval for R&D expenditure to be undertaken overseas. There are some areas that you can claim on, and it's primarily when it is not possible under a law or a particular geographical feature or an animal or a seafood or a fish or something else that lives in the sea is not available for various types of research, or undertaking research with an animal is illegal in Australia. And you need to have some live subjects that you can conduct the research on. So whatever it is, you need to submit an overseas finding, and that has to be submitted by the 30th of June, but it's preferable you submit it first. You do it the same as an advanced finding. So you get certainty, you know that the tax office and Oz Industry are going to approve this expenditure. It's a good idea to then nominate who the research and development team is, and they should always be nominated. If they change, in the file, record who's worked on it, and you need to check their documentation. And at the very least, they should have signed a confidentiality agreement and an assignment of intellectual property. And make sure that if they've already signed these documents in your organization, if you're going to rely on them, make sure they cover what's envisaged to be undertaken in the research and development project. Because their engagement agreements may just refer to them being a truck driver, and that's all they're going to do. The original intention was they weren't going to be involved in a research and development project, but someone's found out they got some particular skills or knowledge in a particular area that you're conducting a research and development process for, and you want to bring them into the team. That's okay. Just make sure you've got the documentation right, because you don't want to be in a position when this turns out to be the development of a very valuable asset that members of your staff are able to claim that they have a proprietary ownership right in some of this new technology that's been developed, new products. The same goes for any contractors you appoint to work on this project. You should have determined what the terms of engagement are. What are the rules? Do they own some of their intellectual property? Now, normally when you're dealing with a contractor, or a professional, they own their own intellectual property. If you wanted assigned to you, you need a separate document done. And normally they'll charge you a bit more money for that. But if you don't do that, you run the risk that a contractor or a professional is going to make a claim on you that they own part of this intellectual property that's been developed, this new product. Now, you might be happy with that. And if that's the commercial risk that your board of directors is prepared to take, that's okay. But I'm just alerting you to the fact that you need to think about these things. And you need to implement a research and development system to record expenditure. This is very important. The Australian Taxation Office require the company to be able to submit a full documentation on what has been the costs that have been incurred, because it's those costs that the R&D rebate is going to be calculated on. Now, once we're underway, we've been to the board and we've got the system set up to record the expenditure. What you then move into is experiments, because we've got the hypothesis, we have the concept of having a core activity. We've now got to conduct a series of experiments, record what the experiments were, what the results were for each individual experiment. And just because an experiment doesn't prove the hypothesis, doesn't mean that all this is wasted. You can still claim this expenditure as an R&D incentive rebate as long as you have kept the records in the manner that's required. And that's what we're summarizing here with you today. So if you're a company director or a leadership team member and you're contemplating undertaking this work in your business, in your company, this is the process you need to go through. And if you need assistance, I'm quite happy to talk to you about the assistance that Towers Business Development can provide. You need to document the results. The R&D registration application has to be lodged with AusIndustry every year, and it has to be lodged within 10 months of the end of the financial year. And for a 30th of June financial year end, that means the 30th of April the following year. So for the year we've now started, 21-22, we're talking about the R&D registration being lodged with AusIndustry sometime before the 30th of April, 2023. You can lodge it earlier. You need to lodge it prior to the company's tax return being lodged, because it's within the tax return that all of the financial data, all the expenses are summarized. What happens in the registration return, it goes to AusIndustry and it's summarizing what the core project was and giving details of the experiments that have been conducted. That's what AusIndustry get. The tax office get the financial figures. And there is a communication occurs between AusIndustry and the tax office as to whether they're happy. So let's look at the research and development rebate amounts for 2021-22. That's the new financial year, which we are now in. For companies with turnovers under $20 million, it's a refundable benefit. And it's the corporate tax rate plus 18.5% premium. Rebate's the wrong word there. It should be corporate tax rate, which is now 25%. So that means that the total rebate would be 43.5%, which is what it's been for the last few years. But the government has now changed the wording to introduce this 18.5% premium on top of the corporate tax rate. For turnovers over $20 million, we have the non-refundable benefit. So the company that's got a larger turnover than $20 million cannot claim the rebate as a cash payment. And the rebate is calculated at the corporate tax plus an incremental premium. And that's based on the company's research and development intensity. So if a company has spent up to 2% of its expenditure on research and development, it has an intensity rating of under 2%, and it is able to add to its corporate rate an 8.5% premium. For companies with turnovers between $20 million and $50 million, the corporate tax rate in this new financial year is expected to be 25%. So that will mean that the company is able to claim a 33.5% research and development rebate. If the intensity level is above 2% of total expenditure is on R&D, the premium goes to 16.5%. So that would mean, based on a corporate rate for a company 20 million to 50 million of 25%, that the effective R&D incentive rebate will be 41.5% for that company. For the year ended 30th of June 2021, the following rates apply. Less than $20 million, the turnover, the rebate is 43.5%, and it's refundable. So that means if the business has undertaken $1 million worth of eligible research and development, so the rebate would be calculated to be $435,000, and the company has a trading loss of $500,000, the company could elect to receive $435,000 as a cash payment to them, and the government has instructed the tax office that those payments need to be made about 30 days after the company lodged its tax return. Why? Because the government anticipates that most of that money, if not all of it, is going to be reinvested in further research and development activities within the company. If the turnover is over $20 million for the year ending 30 June 2021, the rebate is calculated at a flat 38.5%. No question of R&D intensity in the rates that applied up to the end of June 2021. This is all a bit complicated. Towers Business Development can assist companies to get your R&D system set up so that you record the original projects, the prior art searches, the identification of the core activities, the determination of hypothesis or hypothesis, an understanding of how the system works relative to experiments, submissions to your board of directors, approval from your board of directors. All that needs to be documented. And in the system which we have developed, you can utilize all that to ensure you're going to be keeping appropriate records. The system will then produce the information that your tax agent or accountant needs for inclusion within your company's tax return. And that's the whole process, of course. I produced a video recording recently with Andrew Geddes. Now, Andrew's very famous in accountancy circles. He's an Australian accounting industry guru. He's advised hundreds of accountants. He spoke to thousands of them in seminars and workshops over the last 40 years. But for nearly 10 years, He was also chair of Green Cross, a company which grew from a small veterinary surgery practice in Townsville that he originally advised as a consultant 30 years ago. It grew into a top 200 ASX company, and he was the chair of that company for 10 years. We've discussed research and development and accelerating commercialisation grant and early stage innovation company capital raising. And a colleague of mine has reduced that webinar, which went for 1 hour, to a 7.5 minute summary. And you can watch that on our website, Towers Business Development, and on the social media at Facebook and LinkedIn in the Towers Business Development sections. And hopefully that will help you. I now want to move into accelerating commercialisation grant, because this is a very important grant and it's got some relationship back to the research and development area. This is an Australian government grant, and it's a grant of up to $1 million on a 50% funding basis. So it's a big grant. And it's targeted at companies that have got turnovers from $0 to $20 million. The company must be able to identify whether it has its share of the funding. So if a company got a grant of $1 million, obviously it's got to find $1 million as well. You don't have to have that money available in a separate bank account at the start of the accelerating commercialisation process, which can take 2 years. But what you need to be able to do is to identify where you're going to get that $1 million from. Now, it could come from a variety of places. It might come from trading out of other income-producing activities that your company currently undertakes. Or it could be some loan money that you're going to get, that you have a loan agreement already entered into. Or it could be that you're going to raise capital, especially as an early stage innovation company. And you'll be asking Oz Industry as the agents for the Entrepreneurs Program, which administers this grant, to look at your application, and if they're inclined to approve, to give you a provisional approval, and then give you a few months to finalise the arrangement to raise your $1 million at least capital, utilising an early stage innovation company structure. So that's what we mean by identifying where you're going to get the money from. I've already told you the turnover must be less than 20 million. The prime group that the government wants this loan, or this grant, sorry, excuse the word loan, this grant to apply for is the growth sector companies that have been identified by the Australian government. And there are 5 main ones: advanced manufacturing, food and agribusiness. Now, this is basically outside the farm gate. It's not raising animals or growing crops. Medical technologies and pharmaceuticals. Mining equipment, technology and services. Oil, gas and energy resources. They're the 5 growth sectors that the government's identified. And there's a lot of businesses can relate to those classifications. A lot. You can also have companies who are deemed to be enabling technologies and services to these other companies. And these companies will come out of freight and logistics, infrastructure related construction and services, information and communication technology, digital technologies, professional services, but only relating to scientific type professional services and weather forecasting. There is, though, a lot of businesses in these classifications that you can access. So these companies in the deemed to be an enabling technology or services must be enabling or supporting a company in one of the 5 growth sectors through a direct commercial relationship. That's very important. Towers Business Development has considerable experience in this space. Through our associated business, ESS BIZTOOLS, we write material and articles and conduct webinars and produce videos and run training sessions for accountants, business advisors, and bookkeepers situated all over Australia to give them a working knowledge. So obviously we have a working knowledge of how the Accelerating Commercialisation Grant works and also how research and development operates. So if you want to talk to us about any aspect of research and development or Accelerating Commercialisation Grant, just contact us and I'll give you the contact details in a moment. Upcoming webinars. We're conducting a webinar each week through July and August to give you an overview of the sort of services which we can provide. We have early stage innovation company, which is great for the company, and investors love the incentives. So this is on Tuesday, the 15th of July at 12 noon AEST. Early stage innovation companies were created primarily by the government to act as a carrot to investors to try to encourage investors to invest in Australian companies who are developing new products, services, processes, management or marketing methodologies. It's for people having a go in developing. And a lot of them use all their money in creating the research and development. Does this sound familiar to your company? And they will have great difficulty finding their 50% to match the Accelerating Commercialisation Grant that the Entrepreneurs Board has provisionally approved. So the government created early stage innovation companies to try to fix that cash flow problem for young companies. So why not come to this webinar on the 15th of July so that you as a director or a leadership team member or someone who's associated with companies, or you might be an accountant who wants to know more about this process. And on the 29th of July, we've got another capital raising opportunity for a company. Section 35 has been in the Corporations Act now for about 37 years. It's really helped thousands of Australian companies to raise some money. But it's got some restrictions. You can only raise $2 million from a maximum of 20 investors in a 12-month period. You cannot advertise. So you really can only raise money from your own family or from your own employees or your own group, your football team or your cricket team or your golf buddy. You can't advertise or promote it on social media or in newspapers or in a stream of emails going out, which you can crowdsource funding, equity raising, and you can be far more aggressive in raising early stage innovation companies, capital status. So you can learn all about Section 708, which is still very good, but just realize there are some limitations on Thursday, the 29th of July. So you can register for these webinars by going to our website, www.towersbusiness.com.au. And I'd love to see you participating in these webinars. I should have indicated earlier that if you've got any questions, please send them through to me. I can't see any questions. If you're watching this webinar later on at a time more suitable for you, and you have a question on today's subjects, research and development and accelerating commercialization, please send me an email, peter@towersbusiness.com.au, and I will get back to you. If you're an accountant and you're wanting details of the products and services that our associated company ESS BizTools got available, you can send a separate email, peter@essbiztools.com.au. So thank you very much for joining us today for this webinar. I look forward to hearing from you soon as to any questions that you might have about research and development and accelerating commercialization. Have a great day. Goodbye.